In today's video, I'll show you what I think is the easy way to day trade, and I think the key to that is spotting sector rotations real time as they're happening intraday and riding that trend switch before it actually happens. In this video, I'll show you how to spot those sector rotations real time very easily. The key to that is recognizing where volatility is accelerating and taking advantage of those volatility opportunities. So here I have a screenshot of our stock volatility box live scanner. I took this while the market was open today. And inside of the screenshot, if we were to pause and you take a few seconds, take a look at which sectors keep repeating themselves here. You'll notice there's sector badges to the right of certain symbols. The reason for that, if that symbol is a top holding, so for example, Lowe's is a top holding inside of XLY, that's why we see the sector badge. You'll also notice the sector badges are different colors. In this screenshot, some are green, some are yellow. The green ones are in a stage of acceleration. That means the trend is bullish. The yellow ones are in a trade of accumulation. That means that sector's trend is in a stage of accumulation. And you can see the individual stocks trend as well. Now, take a second to just pause, review the screenshot, and see which sector appears more often than any other and what that trend is. Hopefully you spotted the same sector that I'm looking at, but if you didn't, here's a screenshot to make it much simpler for you. XLV is the sector that appears most often in this screenshot, and the second most appeared sector here is XLK. Now, XLV is a sector that's giving us long side setups. XLK is giving us short side setups. So in terms of where we could buy the dip for a sector rotation, XLV is looking really ripe right now. The only other sector that's giving us a long opportunity is booking with XLY, but I think booking is a little too expensive for my taste. So we focus our attention on Abbott, Merck, and Thermo Fisher. Now, take a look at what I have circled here on the right side. That is what today's move is compared to our typical move. So in all three of these cases, we can see Abbott, for example, today's move is 2.8% versus a typical of 1.5%. Greater volatility that we can take advantage of. Merck, 2.4 versus 1.9%. Again, greater volatility. And finally, Thermo Fisher, 2.9 versus 2%. So across the board, we can see that our daily swing today is greater than what we're used to seeing. We do, in fact, have a volatility edge that we can capitalize on. Now, if we take a look at what, in terms of the models, is getting triggered here, Merck and Thermo Fisher are both breaching their aggressive daily volatility box models. And if you take a look at Abbott, that's doing the same thing with the aggressive daily models. The one thing that is different between these three symbols is their market stage. So if you take a look at Abbott, for example, you should notice the market stage is in distribution. Take a look at Merck. The market stage agrees with the sector. Both are in a market stage of acceleration. So here we have bullish opportunities. And same thing for Thermo Fisher. The sector trend and the individual top holding trend also agree. Very easy to spot that. Now let's move into Thinkorswim charts and let's see how all three of these shaped up along with the XLV sector as well. Let's start with XLV here first, and I have the daily models currently loaded on. The thing I want to point out, XLV nowhere near our daily volatility box models. We're chopping well inside of our zones. So we need to use the hourly models for the actual sector here because we're seeing that the sector does not have anywhere close to the same volatility as we are seeing inside of the top holding. Now, when our hourly models load in, that gives us a much clearer picture. Inside of XLV, every single time we've touched the bottom end of our volatility box models, we've seen buyers happily step in. Now, when we see Thermo Fisher, when we see Merck, when we see Abbott on our charts, that's taking place when we're seeing this volatility right here inside of XLV, inside of that lunchtime hour, and that volatility ends at the very end of that lunchtime hour. Very classic pattern that we're used to seeing. So if we take a look at what happens in XLV with the hourly models, XLV in the morning, we breach our models right away. Buyers buy that dip very quickly. The second hour, we see another sell side rip. Buyers again buy this dip very quickly. Sellers try one more time. We go below the low of even the open here. Buyers buy that dip very quickly. And here we even see a setup that we can recognize with our momentum reversal setup. we see the bulls reverse momentum, the bears try to push down lower, and the bulls successfully hold this level. You can also see the market pulse transition real time intraday where we go from red to green, telling you that this trend is now switching. And all of that is right around the 10:20 a.m. Pacific mark. Now let's zoom back out. I'm going to turn off the hourly models and let's come back to focusing on the daily models since that's what we had with Abbott, Merck, and Thermo Fisher, where all three of these were breaching their daily volatility box models. That's what's hiding behind the yellow line there. Now let's work our way down our stock list. We're going to start with Thermo Fisher here, and I'll go through the three different stocks that stood out. Now, Thermo Fisher hit our live scanner when we breached our volatility box models, and we can see the back and forth action inside of the lunchtime hour, along with the entry at that 10:20 a.m. mark, which is where we saw the sector volatility also transition with the market stage. Now, inside of Thermo Fisher, the entry we were looking for was at the outer edge of the volatility box clouds. You see that 608.84. And that's this level right here outside of the outer edge of the cloud, 608.84. If you use momentum to time your entry, momentum switched a little bit after the sector, right around 10:33. If you remember, the sector momentum switched at close to 10:20. Inside of Thermo Fisher, we saw that happen 10 minutes later. Now take a look at just how beautiful of a trade this is inside of Thermo Fisher. We get the entry, if you use momentum near 607.80, if you got the very bottom, that was 606.66 or so. And if you got the entry with the volatility box models, that was 608.84. In either case, your entry was somewhere in this zone right here, and we were looking to ride this entire trend switch into the close. In terms of Thermo Fisher, we hit a high of 614.82. On the scanner, we were looking for 611.48 as our target inside of Thermo Fisher. So a really nice trade here inside of Thermo Fisher and a nice reversal, which if we try and now follow that up with the other stocks, you take a look at Abbott here. Abbott, very similar idea. We had the sell side activity. We breached the outer edge of the models. The at the edge setup is what triggered via the live scanner, both the at the edge and our normal breach. And we can see we made a grind up higher to what is our actual target. You see inside of Abbott, 123.58 was the entry, the target near 124.08. 123.58 is an entry at the outer edge of the clouds, and in terms of that target, 124.08, and you could have ridden it all the way up to even a stretch target beyond a 1-to-1, getting a 1-to-2 inside of the trade in Abbott as well. Thermo Fisher was much better than 1-to-2. Inside of Thermo Fisher, the max potential move that we made versus the actual risk that you had in the trade was much more than even a 1-to-2. It was close to a 1 to 2.5, something of that nature. Now, finally, the last stock we had was Merck. Now, Merck was a little bit interesting because inside of Merck, let's come into the daily time frame chart. Merck was a little bit away from our volatility box models, and Merck, off of our scanner, was the one stock which also had a signal, a lower wick signal from the previous day. We had a lower wick from the time we saw support here with the buyers, and we were looking to see similar support here inside of Merck as well. Now, what's interesting is in Merck, we did not see that same level of support that we saw inside of Thermo Fisher, along with Abbott. We didn't see that same level of support kick in. We breached our volatility box models. 1020 is where we were looking at the entries in all of those stocks. And inside of Merck, just briefly, we saw that bit of support. And outside of that, we then saw a sell-off, whereas inside of other stocks inside of the XLV sector, we saw that rally into the close. If you remember, Thermo Fisher was just a straight rally into the close, and Abbott was something similar, just not to the same extent, and the actual sector also had a massive rally into the close. So Merck was one of the holdings which didn't participate. We didn't guess and choose. We had three total holdings that triggered off of our live scanner at the same time: Abbott, Thermo Fisher, and Merck. And out of these three, we saw 2 out of the 3 went on to hit some really nice targets. Thermo Fisher was the best, hitting more than a 1 to 2.5. Then we had Abbott, which hit a 1 to 2. And then we had Merck, which was a loser. And this was our one loss for the day. I hope you found this video helpful in understanding how to very easily spot the sector volatility. All I did is I loaded in our S&P 100 watch list, focusing on a smaller list of stocks, just 101 stocks, and then just spotting where do we have sector aligning with the overall trend. You can also use the trend following filter to make this even simpler, which would have reduced this list down from 18 stocks just down to 7, which would have included the Abbotts, the Mercks, and the Thermo Fishers. Take care, everyone. Good luck trading, and I'll see you in our next update.